it's so many countries at the negotiating table, and the ability to sign deals that quickly was always in doubt. Trade deals takes months, if not years, to really plan out and detail properly. So we may see tentative agreements and some sort of frameworks being put into place, and that's what we heard, for example, for US and China. But India seems very close, and the news headlines seem to suggest that that could be announced soon. But again, many other countries are nowhere near finalizing a trade deal or even getting close. So, look, I think there is a real strong chance of that an extension of the July 9th deadline of the pause, and I think it wouldn't be a big surprise for markets if that's the case. As you say, it would come as a relief for markets if that is the case. There's still the overhang of reciprocal tariffs and, of course, the sectoral tariffs, which could be very significant on the likes of semi, telecoms, etc. And I think markets are still wary of that. So, tariffs, interestingly, has not been a major source of conversation with clients in recent weeks, but it's still there lurking in the background, and it's still a potential threat to the global economy.
Okay, and the pushback or the defense against the negative impact of tariffs, especially on inflation, right, is going to come from monetary policy and potentially from the Fed, obviously, right? President Trump has been continuing to pressure Fed Chair Jay Powell to cut rates. It's become relentless, and it's also become rude. There have been reports that he's going to want to start talking about his new nominee in short order, well before Powell's term expires next, April or May, right? Raising the prospect that at some stage we could get a shadow Fed or a shadow Fed chair, and that's going to potentially cause a lot of confusion in markets, is it not?
Well, that's right. Look, as you said, there has been a lot of pressure on Fed Chair Powell to ease policy. We know the Fed is fairly split in terms of its thinking, in terms of the FOMC thinking in terms of rates. And there are some that want bigger rate cuts, some that don't want any cuts at all. Powell does sound cautious. And, we think that's right. We think that the inflation impact from tariffs could still take a little while to come through. We've not seen that yet. CPI and core PCE are still fairly benign, but we expect that to come through in the next several months with inflation, both core CPI and PC getting above sort of 3% by end of the year. So that will put off, in our view, the ability for the Fed to cut rates quickly. And therefore, we still think the Fed is only going to cut once this year in December. But to your point, if we see a nominee being announced fairly soon for the Fed chair, yes, it would mean potentially a shadow Fed chair. It could at least hurt the credibility of the Fed. And in that sense, it could be quite negative for the dollar, because the dollar has reacted to any of this criticism on Fed Chair Powell, as well as potential for a shadow Fed being evoked at this point in time so early compared to, as you say, when Powell steps down in May next year.
So, Mitul, let's say it ends up being somebody, the new nominee ends up being somebody like Warsh or Waller, right? Is it necessarily going to have as negative an impact on the dollar? And I ask for a couple of reasons, but one of them is, the Fed chair is important, of course, right? But it's a committee that decides, and the chair's job is to try and achieve or form some sort of consensus. So even if the chair himself agrees or happens to agree with President Trump, and we need to cut aggressively, the other members may not necessarily agree.
I think that's absolutely right. A number of the FOMC members are obviously regional Fed governors, and that is not something that's implemented by the president. So it's not going to be obvious. You have a committee, so it's not obvious that the Fed chair is going to be the overriding factor in that. And as you say, one voice, perhaps a dominant voice, of course. But yes, it may not be the case. And you say, for example, Warsh is perceived to be someone who's relatively hawkish, so it's not obvious that would see a quick Fed rate cut if he's the next chair. We heard from Waller at the end of last week. He sounded fairly dovish, so perhaps there's risk of easier policy there. But what I think markets are looking at here is just that there is potential, at least at this point in time, up until May next year, to have an alternative voice giving potential criticism of Fed policy, or disagreements at least of actual Fed policy. And that could just muddy the waters, and it could result in perhaps less emphasis on what the Fed is actually doing and in terms of implementing, and more emphasis on what this sort of potential shadow Fed is suggesting. So, I think if anything, that's the negative reaction could just come from that potential hit to credibility in the meantime. But as you said, it depends who the governor is. If we have a credible
Yeah.
candidate, and both Walsh and Waller are credible, then it may not eventually hurt the dollar or markets at all.